Hello, everybody. Welcome to our Food Foundry series. It's part of Sierra Commons. Sierra Commons is an educational organization, and we host food and business igniters and accelerators throughout Nevada County. And we are really excited tonight to have a guest, Miguel Barerras from the SBDC. And the topic is funding for small businesses, particularly in our world, food businesses. And Miguel is going to explain a little bit about his background. We're a group of people, our people, participants tonight come from restaurants, coffee houses, caterers, and small batch food makers, even cottage foods, home-based bakeries. So we've got a nice cross section of food makers across Nevada County. And of course, when we go live with this on our YouTube channel, we'll reach a wider audience. And so, Miguel, any information that you can share with us and help us understand, really, the conversation and I have had is about demystifying the funding and the borrowing and the lending process. And I'll just lead in with one comment that we had from a local food maker who's been in business 10, 15 years. I asked her if she had anything she would tell her younger self when she was first starting out. And she said, I would have borrowed money sooner. She said, I let my personal finances go to a shambles. And I wish I was less afraid of borrowing money when I first started my business a dozen years ago. So, with that in mind, Miguel, I'm going to turn it over to you. You can introduce yourself and share your screen. And we're eager and excited to hear what you have to say tonight.
All right, sounds good. Thank you, Manny, and thank you for the opportunity to come speak to you all. The food industry is a very exciting industry, and it's always in demand, right? Because we are all pretty hungry all the time. And basically, many people come up with ideas and different menus and different dishes, and then California, it's a lot of cultures here, so pretty much anything that you can do in the food industry is going to be successful, right? Hopefully. Now, as Manny mentioned, yeah, I am part of the SBDC. I don't know how familiar you guys all are with the SBDC, but
Very.
okay, that's great. That's awesome. So, as you all know, the SBDC has a lot of free services for entrepreneurs and business owners like yourselves. Depending on the area that you want to get assistance on, you can be paired with a consultant or with an expert in that area that can help you through that process, right? Whether it's with your bookkeeping, whether it's in marketing campaign, hiring, firing employees, you get assistance with that and it's free of charge. My role in the SBDC is I strictly help in the access to capital area. So I help clients by connecting them with the different lenders and helping them in the access to capital, right? Whether that is if you need a loan to start a business or if you need a loan for working capital, you want to buy equipment. I've had clients that are in the restaurant industry that an opportunity comes up where they want to buy the building where they operate into. So that also can lead into the SPDC helping you out, right? A little bit about my background. Even though I do access to capital and here at the SBDC we target all loan sizes. The bulk of my experience is in the microfinance, in the micro lending. I spent a good 15 years of my career in a nonprofit micro company in the Bay Area. And now I'm with SBDC, but I still tend to focus a lot on helping small business owners in the micro lending. So with that, let me jump into the presentation. Am I allowed to share?
Oh, yeah. Hopefully you're already activated as, with the ability to share.
On slide.
The
Here we
little
go.
green button at the bottom, is it working?
Yeah, it says that it's not turned on, so I sent in the request. Maybe because
No.
on my other cells.
Jason, do you have
Here we
access?
go. I got it now.
Oh, cool. What does FSCP stand for, Miguel?
Oh, it's a certification on a financial services professional. So along with what I do, I also have experience in financial planning.
Oh, great. Thank you.
Let me see if I can.
Yeah,
There
it
you
looks
go.
like it's opening.
Yeah,
Yeah, looks great.
perfect. And you guys see the deck?
Yes.
Perfect. Okay. So with that said, this presentation will be about the micro lending. Feel free to ask questions. You don't have to kind of wait for me to kind of go through the deck. If you have something that pops up and you have a question, feel free to just let me know. Um, so with that said, we can't really talk about lending without talking about the five C's of credit, right? And I'll explain what those are in a bit. So this is kind of like the goals for today or the agenda. So it'll be the five C's of credit, the role of micro lending, what kind of documentations these lenders are requiring, and what's the characteristics of micro lending. And also, what is the process of the micro lending industry? And lastly, just some cost in terms of the industry on average, so you guys can get an idea of what those are. Um, this is all going to be just general information. Like I said, as an SBDC lending specialist, we work with all of the CDFIs and lending institutions and financial institutions in the state. So depending on your criteria and whatever their requirements are, my role is to kind of connect you and kind of walk you through the process, right?
What is a
So
CDFI?
oh, it's a community development financial institution. I'll talk about it. I'll talk about
Okay.
that as well in the tag.
Okay.
Good point,
Okay.
Manny.
Thank you. Yeah, because I know you're not talking just about banks, which is what most of us think about borrowing money, but you have access to so many different sources and lending, funders for businesses. Okay. Thank you.
Correct. Yes, and the reason for that is that I'm starting with the five C's of credit is because when you talk about lending, when you go to a bank or when you go to a financial institution, this is the things that they look for on applicants, right? You must have the five C's that they call it, and that is capacity, capital, collateral, conditions, and character, right? The more C's that you have, the better your odds of getting that loan approved, right? Now, they're different when you talk to mainstream banking. So I am going to focus on these five C's, how the microfinance industry, how they look at those, right? So just because you are interested in a loan from a microfinance company, they all still apply, like I said, right? The more C's that you have, the better it is for your odds of getting that loan approved, right? Because at the end of the day, the borrower yourself, you still have to show the ability to repay the loan, right? These are not grants or it's not free money. You have to show that you are viable, that you have a business, and that you that can take on debt, right? In this industry, you also are most of the time are required to have assets or other source of income as backup, right? Many times I talk to clients and they're starting like a food business and they do it on their side, right? And it's a great thing, but it's important to keep your full-time job while you also are starting out that side business because that's what lenders want to see, that you have other source of income that you can potentially use that as backup, right? Lenders are typically less sensitive to credit, and that's great in this industry. Character is always a factor in lending, right? Your attitude towards the application process, your attitude towards debt, they mean a lot more in microfinance than when you go into a mainstream bank like Wells Fargo, Bank of America, or any of those big names out there, right? Also, credit, right? We all have credit blemishes in our history. So past problems with your credit are easier to resolve in microfinance than with mainstream banking. Um, some financial institutions require microloans to be fully underwritten, but that's not always the case, right? And then some of them require, I mean, your personal guarantee, meaning that you are the person on that is going to be taking on the loan. I get a lot of times clients saying, "Oh, I want a loan, but I want it on my business. I have bad credit, but my business, I want to have a loan for my business. That is a misconception, I would say, because the loan always has to be under your name, even though you can have a DBA or even though it's going to be for a business purpose. At the end of the day, that application is under your credit as well. So let's go with the talking about the C's. So the first C is just capacity, right? So I'll go just briefly on them and what those are. I'm not gonna spend or dwell too much on them, but in terms of capacity, all lenders use what they call an SDCR ratio, and that is your service debt ability to pay the loan, right? So they go by a ratio. That means that for every dollar of debt that you have, mainstream bankings, they want you to generate $1.25 of revenue, right? So that means that the higher your ratio, the more likelihood that they'll provide you with a loan, right? So they always ask for, or they always look for that ratio being anywhere between 1.1 and 1.25. That is in mainstream banking. In microfinance, they can go lower. I mean, they can go lower than one. I mean, because they understand that most businesses are starting out, and this is a form of an alternative lender in the microfinance. So that's why they are more flexible on that ratio, right? Um, and when they look back at the history or your numbers, it's not as meaningful because it's a new business, and they understand that many times is the first time a client is accessing capital. They come through microfinance companies for that. The second one is capital, right? Like I mentioned earlier, you have to have other source of income to show that you can repay that loan. They call it skin in the game, right? So you want to make sure that you have something that you put on your end that you can put towards the loan. The third C is collateral. Most do not specifically take collateral. Back when I was doing lending in the Bay Area for that microfinance company, we used to take personal vehicles as collateral. So we
Wow.
would do the loan, and then we would put a lien on their title of their vehicle. Obviously, the loan was worth more than what the vehicle was, but the vehicle had a sentimental or a more valuable feeling or to the client because that was their only way to get around it. So they wouldn't want to lose their vehicle. So we would use that as collateral for those type of loans. And those are the kind of things that you see in microfinance. The other C is conditions, right? Because the ratio is so light or so skinny, the conditions are very critical. And what they mean by that is, your business has to make sense, right? You have to be able to explain it to a lender what your business is. You have to know your numbers, know exactly where you're gonna use those funds for growth of your business, or if you're going to invest in whatever it may be, marketing, payroll, employees or whatnot. You have to have an idea of or a concrete just a story that you can tell them exactly what you're going to be using those funds for. So they wanna know that as well. And the last one is a character, right? You have to know your details of your business, your ability, your character. They're not really a FICO-based company. FICO meaning your credit score. They don't really check at what your credit score is, like if it's 600 or 650 or they don't look at the actual number. They look at your history or how you behave with credit. What kind of debts you take on, how soon do you pay, how many lates you have. So it's easier to explain things like your history to a microfinance company. They understand that sometimes we have hardships, lose our jobs or whatnot. So you can explain those type of things to a lender, and they're more flexible when it comes to those type of issues. So, any questions so far with the C's? It was just kind of general information about that.
I have some questions.
Yeah.
So, when you were talking about a personal loan, like if I take out a loan for my business, I incorporated in July, but we've been in operation for over 3 years. So, would they treat that like a new business, or would they look at the years before when it was the sole proprietorship?
Well, that's a good question. The depending on the lender, they want to make sure that you are operational, right?
Hmm.
So you want to show some kind of bank statement history activity. So if you can show that for at least some lenders can go as little as 6 months, anywhere within 6 to 12 months. Like if you show them that you're operational, they can look at that situation and see about a loan for that.
Okay, that was the big question.
Good.
Thank
So the
you.
next topic is the documentation, and it kind of leads to that question. Typically, if you're going to start a business, if this is a startup, because in microfinance there are also lenders that do startups. Obviously, they're going to ask you for a business plan, right? Nowadays, a business plan for any lender is something simple, 5, 10 pages, right? I get clients that send me last month I had a client that sent me 125 pages of a business plan. So, I mean, no one's really gonna go through that or read that out. So, and not even the lender and the underwriter itself, right? And the reason why they do that is because nowadays with Chat GPT and AI, you can just put in a few things there, shoot out a whole business plan. Sometimes you don't even read it yourself and just go ahead and return and turn that in. So don't go that route, right? So just the basic, simple, 5 to 10 pages of a business plan that would suffice for a lender. If you're not a startup, like I said earlier, you must be operational, right? At least 6 months. I have some lenders that I work with that they can do a loan for if you're operational for 6 to 12. 12 months is kind of like the most common, but some can go as little as 6 months, right? And when I mean operational, I mean the bank statements. They're big on cash flow, so they want to see that there's sales, that you're selling, that you're providing services, that you are doing something with your business, right? And also if you're starting out or if your business is still relatively young, you must show also some proof of concept or prior experience, right? So for all of you that are, in the food industry, sometimes it's good to know what is your background, right? I have clients that say, oh, I'm starting out my business, but I've been in the restaurant industry for all my life, right? My family owned a restaurant. I've been in the weaves of it. I know what it is. I've never owned a restaurant myself, but I've seen my parents do that or that kind of thing, right? So you got to show that you have that prior experience and that proof of concept, right? So that's some of the documents. And yeah,
Miguel,
Manny?
let me ask you a quick question. Thank you for clarifying that your life experience, your work experience is so relevant, whether you're doing a restaurant or, a product or a, consumer packaged good in the food industry. But you mentioned business plans. So many business plans these days are what we call pitch decks. They're visual, they're electronically communicated, right? They have to have solid information. You can't just have a bunch of pretty pictures and this is what I want to do. You still have to clarify your vision, your market, your target audience, what your product is, your background, blah, blah, blah. Are these industries as open to a pitch deck as they are a business plan? Again, if it has the solid, data needed.
Well, if you are a startup, I mean, like I said, you want you don't want to pitch your idea. You want to have solid documentation that you've done your research, right? Not just an idea or something. You want to show that, your executive summary, it doesn't have to be 2, 3 pages per executive summary or the body of the business plan, but you gotta have some substance in that. And like I said, I go back to the length of that. You don't have to do it for, 5 to 10 pages. He's kind of like the best that I when I talk to those lenders and I say to them, what do you want to see on a client's business plan? They usually just say that, you know what, just the bullet points of the business plan, put a paragraph or two in each bullet point, and that will make like 5 or 7 pages.
Great. Thank you. And is that the kind of thing you'll look over before you submit to any of the lenders?
Correct. My role as a lending specialist is basically loan packaging, right? So I help clients, prepare all the documentation, review it, analyze it, put it together. And then that way, once I know what your vision is and what your business is, then I know which lender we can go with instead of you randomly or going one by one to all these lenders. By working with us in the SBDC and with consultants like myself in access to capital, we know which lenders we can approach with. Many times, actually, what I do, even before submitting an application, I pick up the phone, talk to the lender, and say, I have this client, this is the situation, is this something you can entertain, or is this something you can do? Or what do you want to see from this client so that when I present it to you, it's in a more favorable light.
Wow. Thank you. That's so good to know.
And along those lines, continuing with the documentation, the most basic documentation for microfinance is just your last year's tax returns, right? For those of you that have tried to get an SBA loan or gone to your main bank and Wells Fargo, Bank of America, they're gonna ask you for 3 years financials and then 3 years P&Ls and your personal financial statement. In microfinance, they're a little bit more flexible. So last year's tax returns must be personal and business. Last 3 months of bank statement, proof of business, that is basically like if you're selling something like your seller's permit or from the city, right, your business tax certificate, your fictitious business name, those type of things are as proof of business. And important, the use of funds statements, right? That could be on a paper on itself or in the application. You have to be able to explain exactly what you're gonna do with the funds, right? I need 15,000 because I need to purchase supplies. I gotta get this equipment. I gotta get that. So I need so much for the equipment, so much for the supplies, and so much for marketing. And then once we present that to the lender, they'll see exactly what the breakdown is. All right. In terms of characteristics of micro lenders, this is where we go into who are the micro lenders or how did you know they are micro lenders. They're typically nonprofit organizations. Basically, any lender outside of the main name brands are alternative lenders. So microfinance is part of the alternative lender industry. These lenders are community based, right? They have a lot of social impact that they want to show. So they do loans for focusing on helping women own business, minorities, underserved community, or especially like the low income communities, right? So this is where these lenders tend to help out the most. And also a lot of these lenders, they have their own technical support team for borrowers, right? So after you get the loan, they'll ask you if you want some additional further assistance with your business. So they'll do some kind of advising with that as long with the loan. So it's a combination of loans and free business consulting. As far as the loan sizes, they can go as little as $5,000, which that has actually come up a lot. When I started doing microfinance, we used to do as little as $500 for loans. So nowadays, that's nothing. So now these lenders, they moved it up to like around 5,000. That's the minimum. And they can go as high as, 150 or 200, but the bulk of it, they kind of stay within the 5,000 and the $100,000 range. That's pretty much the most common that I see for applicants and businesses getting this type of help. Like I said earlier, they do startups. There are some that do startups. Most of these clients for micro lenders are home-based businesses, right? They start baking from their own kitchen and then they want to move to a commercial kitchen or they want to start selling online, but they're still at home. So it's okay if you're a home-based business. And the most common and most important thing is that for many of these businesses, the micro loan or a microfinance company is usually their first source of outside funds, right? When I was in the industry, we used to say that our goal in the microfinance is to help small businesses graduate to mainstream banking, right? So you start with smaller loans, 10,000, 15, 25, 50, and then once you start building that credit and once you start growing your business, then you can graduate and walk into your bank, Bank of America, Wells Fargo, and say, now I'm ready for the big SBA loans or the big amount of loans once your business has grown and also once your credit has shown the ability to pay back these loans. And we are a great a partner of the SBDC, the lenders, right? Like I said myself, the bulk of my production in SBDC is with microfinance, so I have a lot of relationship with these lenders, and I work very closely with them. As far as their process, if you're familiar with what an SBA or a loan or a process with your bank is, micro is a lot more quicker. They usually take, as little as 15 days to 60 days is kind of what it takes for the loan to fund. They check after they check their, things like your bank statement, credit checks, loan docs, and everything. That whole process, since from beginning to funding, it's about 15 to 60 days on average what they do. Any questions on those documentations before?
I was going to ask if these lenders are California based or national, or if like what kind of
Yes.
area are we looking?
Yeah, good question. So, like I said earlier, since these lenders are community based, they want to help the minorities and the underserved communities. Some of them are just California based, and some of them have products that they only lend to like citywide base, right? For example, I have a lender like Main Street Lounge that they have a program where they have a program for a loan product that they can do very affordable and very quickly, but your business must be located just in Oakland, for example. So there's lenders like that they have certain products, and then there's others that are nationwide that they don't care where your business is located, they can lend nationwide.
Hey,
The last part is just the cost and terms so that we have an understanding of what that looks like. So in terms of that, microloans are more expensive than larger loans. SBA is always the most affordable way to get funding. And that's because, the source of funds are different, than for banks, right? The source of funds for microfinance, sometimes it's fundraised through other people. So those funds get fundraised by a team. Like when I was back in the Bay Area with the microfinance, most of the money that we used to lend, it was money that was fundraised at events that, businesses, corporations, millionaires would like to donate so they can benefit, the good of the community. So they wanted to just kind of have an impact on their money. So they would donate this money to the financial institution, and then the institution would then in turn turn it into loans, right? And the reason why they're a little bit more pricey as well is because they're more riskier, right? They're taking more of a risk when they're lending to someone that is very new or someone that has, very little time in business. As far as the cost for the loan, for closing costs, they throughout all of them, they all have different closing cost types. But I would say it's anywhere between 1.5 and 3.5% of the loan size. That would be kind of like your loan cost for the loan. And as far as the rates, as far as across the board, I've seen anywhere in the average of anywhere between 7.5 to 12.5 a year on average. The term anywhere between 3 to 10 years, but most of them are around 4 to 7. That's kind of like the bulk of it. And some of them actually a lot of them can refinance, so you don't have to completely pay off your loan before applying for another one. So you can do that as long as you show that you have made on-time payments for like 10 or 12 months. You can come back to the lender and say, I need more funding. Can you increase my loan? So they'll do that, and there's no prepayment penalty for that. And for closing, like I said, it's about 15 to 60 days on average that it takes for these loans to get funded. And just last things, just things to remember from this information. Some loans may be fully underwritten. The advisor in this case, if you come to the SBDC, we are able to help you kind of guide you in the right direction to go to see which lenders can benefit your particular situation. So this is an excellent source of funds for you, our clients of SBDC. And now this year, actually, because of the administration and the landscape of the economy, these type of loans in 2026 are going to be more important because a lot of people are hurting for access to capital. So these institutions are a little bit more flexible on doing that.
Miguel, can you explain to us what that means, fully underwritten?
Fully underwritten means that they're going to require you more taxes and more financial documentation. So, like I said earlier, some will just require you last year's tax returns and bank statements. When it's fully underwritten, they're going to ask you for P&Ls for the last year, balance sheets, maybe 2 years of tax returns. They'll look at your credit score. Even though some lenders in the microfinance, they say that they're not FICO based. So when it's underwritten, they do check the FICO score. But typically, it's not really common for that to happen. The type of institutions that do the fully underwritten loans are like credit unions, because credit unions are now starting to also target the microfinance industry. So they're starting to have like special programs and products that they'll call it like a microloan, like 10,000, 25,000. But unfortunately, I would say that because they're a credit union, they have to require a lot of documentation up front, right? So I've had clients that say, I only want 10,000. Why are they asking me for 3 years of tax returns and all of these types of bank statements and P&L? So that's why sometimes I kind of change them or go another route so that way it doesn't feel too much of a hassle.
So how does that fully underwritten apply to somebody that's literally just a startup if they don't have that P&L yet?
Yeah, no, in that case it wouldn't apply. So when, for example, the credit unions, they wouldn't do a startup, right? So that's why there's only certain financial institutions that does startup loans.
Okay. All right.
Yeah,
Thank you.
not all of them do.
Okay. Thank you.
So, like I said earlier, between 5 and 100,000, microloans can solve a wide range of client needs, right? I mean, especially for the restaurant industry, for businesses that are starting out, for home-based businesses, anything between this range, it's impactful and it's beneficial for you to start getting access to it. Even if you don't see that you have the need for a loan at the moment, I always tell clients that it's important to start building business credit, right? So you have a business and you're operational. It's good to start having a loan to just so that way when the time comes that you, like I said, may need to purchased a restaurant, the building. So you want to show that you have had some history in having some business debt. So that's why it's important to start building something on that end. Okay, so any other questions? Any final questions? This is that was a lot of information. I don't know if this was repetitive for a lot of you, but I hope that it was helpful.
Okay.
Hey, Miguel, it's Mark.
you.
Really appreciate the presentation. What kind of restrictions are the loans normally? Are they just for equipment and materials and ingredients, or is it restaurant but is it not for employees or anything like that, I would imagine?
No, no, no. Depending on the lender, as far as the use of funds, there are
Mm-hmm.
no depending on what we package the loan for or what we put the use for, right? If you need money for payroll, we can freely say the loan is for payroll or to hire employees, or if you need equipment, depending on what the need is, my role is to find out the right lender for that because there are some lenders, for example, that don't finance equipment, right? So there are some lenders that don't like to finance invoices. So it just depends on what your need is, and then my job will be to find the right lender for you.
And to that, I'm just curious, if you take a loan for a certain thing, as long as you're repaying it, do the loans require proof that that's what that went for?
Oh, good question. Yes, I get that a lot too. So no,
Get it on
my
camera.
my um my role is to just well, even the lender's role, when the loan is funded and it's been dispersed, as long as you're making the payments, they're not gonna go back and check what you used the loan for or how you're using the loan for. So as long as you're making your on-time payments, you should be you are okay, but obviously, you should be investing it in your business, right? Yeah, you're welcome.
Anna, did you have a question?
No, the only question that's kind of coming to mind, I think you touched on it a little bit, Miguel, towards the end is just how personal credit and business credit like sort of intersect. Um, I'm realizing I really don't know if I've ever had business credit. I'm now starting a new venture, but earlier in my life I had I had a business for about 10 years, and I don't think that I had business credit, but obviously I had personal credit. So yeah, anything you can kind of elaborate on between the intersection of those two things would be helpful.
Yeah, I mean, and that's also pretty common from people to kind of get really kind of confused about. When I say business credit, is as far as when you're applying on your application. The application when you're taking out that loan, it's gonna be under somebody's name. Usually the owner. It has to be the owner, obviously, right? So the loan is gonna be under your name, but when you establish business credit, it's important to have business financial institutions on your credit report that they only lend to businesses. So that way you can start building business credit that way. And also nowadays, it's common to hear about there's like an SBA. If you type in your company, your company starts generating business, some kind of credit. I don't have the actual website, but I've seen that now where it's kind of like an experience, but it's for businesses. So you type in your business in that platform, and then your business is going to show there, and it's going to start having like a score there. So that's kind of coming out, more often than that. But as far as the application itself, it will have to be on personal credit.
Thank you.
Please.
I have a quick question too. You had mentioned that the micro lenders like to, like if it's a woman-owned business. I know with state contracts, there's a consideration if you're a small business. I don't know if it's still true about being a minority-owned business or a woman-owned business, but there was a like a 5% consideration when you would bid on, government jobs. Is there any kind of consideration in the micro lending world for those kind of categories of business owners?
It's a per lender thing. So if
Is
the
it?
lender has certain program that is favorable to like women-owned business or veteran-owned businesses, they might have a break on the rate, for example. But you see that more on SBA loans, right? So when you have an SBA loan and you're women-owned or minority-owned, that you get a certain favorable credit for that. But in microfinance is per lender. So depending on the lender, their criteria, they might be able to provide something different.
And how do they feel about senior citizens?
No, I mean it's general public, right? I mean
Okay.
there's no negative or anything like that.
Okay, good.
Miguel, you mentioned Main Street launch. I'd like to put in the chat some of the names of the micro lenders you're talking about, just so people could look them up on their own and read about them and get familiar. You mentioned Main Street launch. I know about Working Solutions.
Yeah, Working
Any others?
Solutions, Pacific Community Ventures also it's one of them that is pretty popular. Opportunity Fund, Action Network, it's also another one.
Opportunity Fund and Axion Network.
Action Network.
Do you work with Lendistry at all, or are they
Lendistry as well is also in the microfinance. They tend to do bigger loans, but yeah, Lendistry is also one.
think I misspelled Opportunity Fund. I can't tell. Okay, so people could look these up, go to their homepage, see what they're about. You mentioned the underwriting, well, not underwriting. I never thought about this until you were talking about the source of the funds from these micro lenders. I never really thought about that. And you were saying they can come from various sort of well-off individuals or
Yeah.
I don't know why I never thought about where does the money come from these people that lend to small businesses.
Yeah, because most of these financial institutions are non-profit. So people donate money to these non-profits, and then obviously it's a win-win for the billionaires, right? They get a write-off. They also are putting some good on the community because they know that their dollars are being put to work in underserved communities. And also there are grants that they apply to by the government. SBA also has a lot to do with that. And also mainstream banking, right? Wells Fargo can donate to a financial to a micro lender, and then that way Wells Fargo can say, we're helping. We might not be able to give you a loan through Wells Fargo, but hey, we're donating money to this called a financial institution. So
That
it's a lot of places.
that's so interesting. Miguel, do you mind stopping your screen share and we can
Yes.
take a few more minutes? We can all see each other for this for the Q&A. Yeah, that is so, I don't I'm embarrassed to realize I never thought about the source of those funds from micro lenders. So that's really interesting to know. Yeah, Jade just offered up that her first cafe was funded by the Opportunity Fund, you know.
Oh, there you go.
And being young, female, and gay was part of, that was their mission. I mean, we're still California. We still support we still support the unique individuals. Um, does anybody have, I want to form a question, but I want to see if any of you, some of these folks, like I mentioned, are restaurateurs, some are caterers. Everybody in the food business probably wants to scale up a product that they can use as an income source, whether they're a cafe or they're a caterer in the down season or, a private chef. You mentioned being loan ready. And I'm thinking, okay, let's say I was a caterer and I have busy summers, the rest of the year is slow. and I'm thinking I'm going to put 5 or 10,000 into equipment, um, bottling, whatever I need to develop this product. What if I have the money, but you're suggesting maybe go for the loan now if it's a smaller loan that you can handle the payments, because a year or two from now you might need 50 to 100,000, and now you've already established credit. Do I have that right?
Yeah, that's exactly how it is, right? So it's better to get a loan when you don't need it, especially if it's in that size, like 5,000, 10,000, and you start building a relationship with the lender, right? I have a lender, oh, also TMC is another one in the microfinance. So I have a lender that they can turn, those type of loans, 15,000. They only require you 3 months of bank statements, proof of business, and an ID. And then those things, they'll look at the application. I'll work with the lender closely with that, and then they can turn out a loan in 2 weeks.
Wow. I I have a question. So we use Square in our cafe, and part of the Square community is they have a lot of different services that they also provide to small businesses, and one is a loan program. And I actually have borrowed money from them just to get through a couple little hard spots, and it was so easy. But I think I couldn't quite calculate out what their rates are. It's not my strong suit.
Like 100.
Yeah, well, it's a flat rate. And it's, if I worked, and it has to pay back in 18 months, and it's kind of sliding scale. But what's nice about it is that they take the money out every day. The loan is repaid every day. And it's like 20% of whatever my credit card receipts are. So it's not a big hit to pay it back. And it's based on a percentage of that day. What do you think about funding like that?
Those are what we call like predatory lenders.
Yeah, I was afraid of that.
Yes, I mean, they're so easy to get money,
Yeah,
but number one, it doesn't really benefit your credit because they just base it on your sales from your merchant.
yeah,
So it doesn't really go on your credit as you're building something. And also the rate, right? They take money every day. So if you were to add that up, you're paying close to like 60 to 80% in when you do the calculations. And we've
right.
we've done that with other clients as well. Um, and it's hard to for a business owner wanting to go the lender route where you supply documentation and you wait for a response and it takes 2 3 weeks. It's hard sometimes for a lender to just say, you know what, I can just call PayPal and they'll give me money in 2 days, right? or
Yeah,
or any merchant cash advance. But you should still try to, go the lender route and build some kind of relationship and credit that way. Who's to say? I mean, I'm sure many clients do this. They get a loan and then they still go back to PayPal because they're never gonna say
right,
no.
right. No, they don't.
One of our restaurateurs is weighing in that the capital advances are about 40%.
Uh,
Yeah, 40 to 60. Yeah, they're they're
That,
they're um they're called merchant cash advances.
that sounds like the business version of like paycheck advance companies, that just charge through the nose.
yeah, I
No,
don't think,
but these people are better because they have their claws in your business, so they're in your merchant.
So it's hard to resist.
Yeah, exactly.
Wow.
I would
I'm
say
gonna,
use those as a last resource. I mean, if but you should do the right way by, getting your right credit, building business credit, going through a lender, that type of thing.
Can I ask, what's the best way to go about getting help from the SBDC and to find like a counselor so that you can access good loans?
Yeah, so the easiest way is to sign up because before I even start working with you all, I mean, I still would have to sign you up for to become a client of the SBDC. And to do that, it's just a simple link. You fill out your information, just basic general information, your name, your business. Are you a
Mhm.
business owner or are you wanting to be a business owner? And then once you do that, the next important step is to do an intake interview with our admin. And that call is over the phone. It takes about 10 minutes. And they just basically ask you for your profile information, right? Where is your business located? When did you start it? What are you looking to do? And then in that call as well, they're gonna explain to you all of the services available with the SBDC that are available for you. So that way you can see what's out there, and you can just say, you know what, I'm interested in access to capital. I met Miguel somewhere. If you mention my name, they'll probably send you with me directly after you sign up. But if not, you can just say, oh, I need help with marketing and a marketing campaign or HR or whatnot, and they'll put you with a consultant that has expertise in that area.
Yeah, I mean, I believe that we are already signed up with the SBDC so that we were able to take this course. So
Okay,
then would we be able to call them again and say, I already have an advisor with Robert Trent, but can I get an
there you go.
additional advisor?
Um,
Yeah, let me weigh in real quick. Most of you are already signed up for the SBDC. If you haven't, I will make it easy for you. Let's say Robert's your primary advisor or I am. You just reach out to me and I'll make the direct link to Miguel. You still have a
Okay.
primary advisor, but we're obviously always more than happy to say, hey, Miguel, make an email introduction so you can have a session with Miguel.
Oh yeah, just to if your need is with access to capital, you can contact me, like you said, directly. I am in SBDC. I'm regional, so I cover all of Northern California. So I go as down as the Bay Area, Santa Cruz, and then we go out to the Oregon border, and then Stockton all the way to the Nevada border. So I am regional, so I work with any client in that area, but only in the need of access to capital.
so I uh, I went through the intake process with SBDC. I took the Food Accelerator Part 1 last fall, and it was just maybe just several weeks ago that I actually signed up through SBDC, which was very different than just signing up for the class. You are not automatically signed up with SBDC. So you do have to go to the Sierra SBDC to sign up. And it's really, I just want to say it's really, really helpful. It takes, about a 10 to 15 minute intake interview and maybe 30 minutes if you ask a lot of questions.
Yeah.
But the intake interview was really helpful and really helps roll out and help you define what it is that not just what you need, but also the priority. Like do you need marketing help? Where are you in your evolution of your business? And so they'll help direct you to the right resource. And then we had a CPA was one of our speakers in the last class. So I specifically asked for him to talk about the finance stuff. So it's really having these speakers, having you, Miguel, is just awesome. So now we have a real person that we can ask for.
There you go. Oh, thank you.
And Miguel, your email is just Miguel at norcalsbdc.com.
Yes, simple.
Okay. .org.
Oh, thank you. SBDC.org? I should know this.
That's what I wrote down.
.org?
Yes.
Well, I'm putting it in the chat again. Okay, so the good news is, and you're right, because Miguel works regionally, you can probably just email him directly. Typically, if you're working with me or Robert and say, hey, I need to speak to an HR person or this person, we usually make that referral, but it seems like you can just reach out directly to Miguel.
Yes, that is correct. Because I'm regional, and if you guys are in part of NorCal, then I can work with you directly.
Great. Any other questions for Miguel? All good.
Great
All right.
information. Thank you.
All right, thank you.
Thank you, everybody. And this has been the Food Foundry series, sessions from the Food Accelerator from Sierra Commons. And thanks so much for attending, everybody.